Hello and welcome to Only 3.0. So I want to build on the recent video I made about understanding token unlocks and how that's a very important tool to have in the investor's arsenal. Helps you to identify when's the best time to buy coins, potentially when you need to be aware of sell pressure coming into the market. So to build on that, I want to talk about the topic of understanding the difference between market cap and fully diluted market cap and why this is very important to understand when you invest. So when you look on any price websites like CoinGecko is the one I tend to like, you see something called market cap. So this is effectively what the project is worth. So and it's calculated by the price multiplied by the circulating supply. Now we know in crypto that not all coins or tokens are are fully entered into the market from day one for projects. Because as I said in the last video, about 5 to 20% of the token supply actually goes into supply from day one, and then the rest is distributed over, say, a year or 5 year, depending on the token's vesting schedule, which just basically means distribution schedule. These could go to investors, the treasury, marketing, advertising, influencer promotions, DAO, whatever. So when you're investing in any crypto project, you need to have a holistic view, a full view of the project and a full view of the valuations. Okay, so don't confuse market cap with actual valuation. So whenever you're on CoinGecko, always look for this button, show fully diluted valuation, and always click on it. Okay, and it will show you something interesting. So let's use Bitcoin for example right here. It says Bitcoin has a market cap of $367 billion, but a fully diluted valuation of $403 billion. Why is that? Well, here's why. We know Bitcoin has a maximum supply of 21 million coins, and we know that only 19 million coins are in circulation. So there's another 2 million coins to come into circulation. So the current market cap right here is only based off this, the circulating supply of Bitcoin. The fully diluted market cap here is based off price multiplied by the total supply, because we know that this is the real supply of Bitcoin. So when you want to assess the value of a project, whether something is cheap or overpriced, don't always use the circulating supply. Use the total supply and thus assess the project's value based on fully diluted valuation, not market cap. I'll show you why this is really important. So with a project like Bitcoin, maybe you could use market cap as a good barometer for value because most of the supply is already in the market. There's only 2 million coins left to come in the market. That's what 10%, about 10% more of a supply. So about 90% of Bitcoin supply is already in the market. Only 10% of supply pressure is likely to come back in the market, which is a very small number. So, in Bitcoin's case, market cap is a very good barometer of its value, current value, and you don't really need to pay much attention to fully diluted valuation. But where is this important? Well, let me show you a coin that has very little circulating supply. So, Optimism. Here it is. So, Optimism is a layer 2 scaling solution on Ethereum. Again, this video is not really about telling you about what Optimism is, it's about understanding how to assess the fundamental value of projects. So if you look at Optimism right now, you see that the market cap of Optimism is $202 million. Now, that's very good for a layer 2 scaling solutions because blockchains are the most valuable asset class in cryptocurrency, and they tend to have market caps in the billions. Look at Ethereum market cap, that's probably closer to 200 billion, and Binance is, I'll probably assume, 50 billion, etc., etc., etc. So, blockchains have the highest valuation. And if you compare Optimism to a like-for-like valuation, which would be Polygon, I would assume that's probably about close to 10 billion right now. You might look at this and say, wow, okay, it's 202 million now, A competitor Polygon is nearly 10 billion. There's so much room for this to grow. Not so fast. Look at the fully diluted valuation before you come to any conclusions about what something's worth. Now, the reason why the market cap is so low is because the circulating supply is so low. The circulating supply right now is 200 and about 15 million coins out of 4.3 billion coins to come on the market. So what we're talking about, only 5% of Optimism circulating supply is actually in the market right now, available to buy and sell. So what happens when this other 4 billion comes into the market? That's 4 billion new coins. That's 4 billion new, coins coming in to be sold. That could significantly crush the price. So always look at the maximum and total supply and fully diluted valuation before you make an assessment. So when you look at the fully diluted valuation of Optimism, then the price kind of makes some sense now, because you say, okay, I would expect this to be priced similar to, well, not Polygon, because Polygon's a lot more established, but Polygon could be the kind of yardstick you use to compare what you think Optimism's worth. So you could probably say Optimism's worth half. So I would say, in my opinion, Optimism's worth half of Polygon's value, because Optimism has room to grow and Polygon's a very well established layer 2. So if I was trying to assess whether I think Optimism's a good buy at 94 cents, I would say, okay, well, the fully diluted of Optimism is $4 billion. I think Polygon is a good like-for-like competitor. So let's see what Polygon's worth, or Matic now they call it, sorry. Matic is fully diluted valuation is at 7.7 billion. So by that performance measure, and I said that I believe Optimism is worth half of Polygon, that means at 94 cents, Optimism is accurately priced in the market based on fully diluted valuation. So would I be willing to buy Optimism at 94 cents? Maybe not as a value investor thinking, is it underpriced? Because it's not. I think it's priced right. But, crypto value doesn't always win. There's lots of speculation. So there is still potential room for Optimism to go up to $10, $20, because in crypto there could be situations where the actual value of the coin or project is a lot more than its real fundamental value, the value that what the underlying technology is worth. But there's a useful tip there. So when you try to understand whether something is accurately valued, don't just use market cap, because if you compared Optimism's 200 million market cap to Polygon's market cap right now of 5.7 billion, you'll say, wow, Optimism's so undervalued. But look at the supply. The supply is incredibly different, and when you compare the fully diluted valuation to Polygon's fully diluted valuation, I think it starts to reflect more accurately value. Hope you like that content. Hope you like the alpha. Please like, subscribe, leave a comment, share, and have a good day, everyone.